Let's talk about something most of us have dreamed about at some point. Getting rich, like overnight. But what actually happens when that dream comes true? Well, it can turn into a nightmare surprisingly fast. Today, we're going to get into why that is and exactly how to handle it.
Seriously, just for a second, imagine it. Maybe that one wild investment you made suddenly pays off big time. Or a little side project you started just explodes. Or hey, maybe you actually win the lottery. It sounds like a fantasy, but for a lot of people, it becomes very, very real. So, what would you do?
But before you start picturing the yacht and the mansion, let me tell you a quick story. This is Jack Whitaker. Back in 2002, he won a massive $315 million Powerball jackpot. He was an incredibly nice guy, gave away millions, but that generosity, as he said himself, is what ended up destroying his fortune and his family. His story is a huge warning sign about the dark side of sudden wealth.
And that brings us to this very real thing that financial planners call the sudden wealth curse. It's this idea that getting a huge amount of money out of the blue often creates way more problems than it solves, especially if you're not ready for it.
So why is this so common? Well, think about it. Most people who get rich overnight have spent their whole lives being consumers, not investors. They've never had to manage serious money, so they have no idea where to even begin. And that makes you vulnerable. Your relationships get weird, old problems can come roaring back, and suddenly everyone you've ever met sees you as a walking, talking ATM machine.
But look, it's not all doom and gloom. This isn't a death sentence for your happiness. We've got a roadmap to get you through it. We're going to cover your first moves, how to restructure your life, the one golden rule you have to live by, how to build a portfolio that buys your freedom, and finally, what being rich really truly means.
All right, let's dive into your first moves. The second that money hits your account, the clock starts ticking. And believe me, the first few things you do are absolutely critical for your future and for your sanity.
Your first move is going to sound completely backward. Do absolutely nothing. And tell no one. I know, you're going to want to shout it from the rooftops, but trust me, privacy is your new superpower. The only person you should talk to is an attorney, specifically one who deals with trusts and estates. They are your new front line of defense. The goal here is to become what's known as stealth rich. It's pretty much what it sounds like. You keep your wealth totally private to avoid all that unwanted attention. Because once the world knows you have money, the vultures start circling. You know, they say money doesn't change people, it just makes them more of who they already are. Okay, so you've gone silent and you've got a lawyer. Nice. Now it's time to actually start changing your life. But, and this is a big but, the key here is to move slowly, very, very slowly. This is not the time to make huge, drastic changes.
You know, you always hear people say, don't quit your job. I think that's kind of bad advice. Let's fix it. If you hate your job, you should absolutely quit that job. The key is not to quit working altogether. Let me tell you, being rich and bored is a recipe for disaster. Find something else to do with your time, something that gives you purpose. And for at least 6 months, just try to keep life as normal as possible. Let yourself get used to this new reality.
Next up, debt. You've got the cash, so you just pay it all off, right? Well, not so fast. You want to be smart about this. High-interest debt, like credit cards, yeah, wipe that out immediately. Paying off a card with a 25% interest rate is like getting a guaranteed 25% return on your money, risk-free. But for low-interest debt, like a mortgage at 2 or 3%, you might actually be better off keeping the loan and investing your cash instead.
And now for the hardest part. Family and friends. The fastest way to ruin those relationships is to start loaning out money. So here's the rule, and it's a tough one. If someone you care about genuinely needs help, give them the money. Don't loan it, give it. But you do it with one condition. They can never, ever ask you for money again. It sounds harsh, I know, but sometimes you have to be cruel to be kind if you want to save those relationships.
So we've handled the first steps and the tricky social stuff. Now it's time for the single most important financial rule of them all. This one idea is what separates the people who stay rich from the ones who end up broke.
This is it, the golden rule. Never spend the principal. Only spend the income that it generates. See, most people have a consumer mindset. They see a big pile of cash and immediately think, what can I buy? An investor sees that same pile of cash as a money tree. And your job isn't to chop that tree down for firewood. Your job is to help it grow so it produces fruit for the rest of your life.
So how big does that money tree need to be? Well, there's a super simple formula to figure this out. We call it your freedom figure. Just decide on the annual income you'd like to have and multiply that number by 25.
So if you want to live on, say, $200,000 a year, you'll need an investment portfolio of at least $5 million. This whole thing is based on what's called a 4% safe withdrawal rate, which lets you live off the returns without ever touching that original nest egg.
Okay, so you've got your freedom figure. Now, let's make this really concrete. Let's pretend you just got $5 million. How do you actually invest that to create that steady income? We're going to walk through a hypothetical freedom portfolio right now.
At this point in the game, your main goal is wealth preservation. It's not about being super aggressive anymore. That's why we're going to build a really diversified portfolio. By spreading the money out across a bunch of different assets, we can lower the risk and create a whole bunch of different income streams.
Okay, let's break this down. We're putting $1 million in the stock market for long-term growth. We're putting another $1 million into bonds. Think of those as the stable, predictable part of the plan. $1 million in real estate can bring in steady rent checks. We'll put a smaller chunk, maybe $500,000, into something higher risk like crypto. That's our moonshot. And finally, $1 million in a high-yield savings account so you always have cash ready. All told, based on historical averages, a portfolio like this could spin off over $300,000 a year in passive income.
Now, if you've been paying close attention, you probably noticed we only invested $4.5 million. So what about that last $500,000? Well, that's for you. That is your fun money. Go buy the car, take the crazy trip. You have to scratch that itch to spend. Otherwise, you might be tempted to mess with the main plan. Think of it as a safety valve.
We've covered all the practical stuff, the rules, the portfolio, all of it. But none of this financial planning means anything if you don't understand what the real goal is. So let's talk about what it actually means to be rich.
This right here is the whole point. Real wealth isn't about the fancy cars or the big houses. It's about freedom. It's about waking up every single morning and getting to decide exactly how you want to spend your day. The people who stay rich are the ones who understand that the most valuable thing money can buy isn't a thing at all. It's their own time.
So many people who come into a windfall chase after possessions instead of freedom, and that's usually why they lose it all. So I'll just leave you with this to think about. Money can buy you stuff, for sure, but its real power is that it can buy you time. So, what would you do with more of it?